let's look at what all categories do we have for investing. So it is not just about blindly, it is not just equity. When you talk about equity, you need to understand if you want to invest directly into the equity, like you want to buy shares of Reliance directly, or you would want to invest in a mutual fund, which is investing in not just Reliance, but other oil and gas and telecom companies. So when we talk about equity, we should look at it from directly as well as indirectly perspective. And there's a piece of advice I would give here, that there's a lot of trading activity there's an uptick in the trading activity which we have witnessed in the last 2-3 years. And because of this trading, we forgot how much overall we are making. And we end up mixing our long-term investments with short-term investments. Suppose I feel ITC is gonna turn 2x in like 5 years horizon. Then that is my long-term investment. I will keep my ITC share in a different account, and I'll keep my shares which I have bought for like 10 days or 15 days in a different account, so that I don't end up selling ITC when I need funds for my short-term purchase. So that is a very important concept that we need to keep in mind. You should not mix your short-term trading with your long-term investments. And also, I'm sure that not all of us have bandwidth to understand which is the current industry which is good to invest in, which is the correct stock to invest in. So always understand how well you are positioned. So in terms of equity portfolio, only if you have experience and you have risk appetite, you should invest directly. But if you don't have risk appetite and you don't have bandwidth to read about the companies and the industry, then you should go via mutual funds route. So this is on the equity side. Debt funds we have already discussed. Then there's a very important component that nobody in general talks about. These are the real assets. By real assets, we at this stage, at our current age, we don't think about gold as an asset, real estate as an asset. But yeah, once we start earning, we get to hear things like, you should buy a house. Why don't you invest in that property that is available at a very good price? And those kind of things start floating in our ears. But we really need to keep our eyes and ears open while investing in the real estate, because we forget that real estate the era of 2010 was different, when you are putting 1 CR in a property and it turns 2 CR in 4-5 years. But the era right now, from 2014 till 2022, there are a lot of properties in cities where the price has not appreciated at all.
Geetika, one question actually.
Yeah.
So how to invest in REITs and debt funds?
REITs. So, sorry. So REITs have been, they are trading on stock exchange. If you see, real estate REITs are Indospace, Mindspace, and there is one more REIT which are available on our trading exchanges. So you can buy a portion of those REITs. And what I have seen is, you not just get the dividend which they pay out, but you also get the price appreciation. And as per my analysis and research, I feel in return from REITs, dividend plus price appreciation is more than what we get in an asset when we purchase it on our own. Because when we invest in a REIT, their portfolio is very diverse and they keep shuffling their portfolio. They are more closer to the market than we are. But when we buy a property for our own, we are stuck with one property in one area, which might or might not get any interest from a buyer at the time when we need the money. So we are putting aside a very large amount of money, and we are putting all our eggs in the one basket. But when we are investing in the REITs, we are investing in a diversified portfolio, which is investing in the commercial parks, which is investing in the amusement parks, in the hotels, like anything and everything related to real estate. I'm not an expert in the real estate domain, but my understanding is commercial yield from the rental property is higher than the domestic yield.
So debt funds also is the same way. I mean, can we buy
debt funds? Debt funds, there are, similar to mutual funds, there are debt funds of all the fund houses. Like there would be Access Debt Fund, there will be ICICI Pro Debt Fund. So you can invest in the funds via their portals. The way we invest in the mutual fund by going to the broker's portfolio, broker's platform, and selecting the fund that, I want to invest in Nifty 50 fund of Access. Then I'll go to Access portfolio, select Nifty 50 and invest. Similarly, there are debt funds on their portfolio where you can invest. And there are hybrid funds also, where they keep a portion of their money in equity, a portion of the funds in debt funds.
Thank you for that.
Now, moving on to the very interesting part of cryptocurrency, I'm very sure this would be the hot topic in the campus, because a lot of my cousins and a lot of my juniors, they talk about cryptocurrency. Any views you guys have? Have you guys invested in cryptocurrency? Have you burned hand? Have you made money?
No, as such, I have not invested in it, but speculation is like I'm keeping on track. It's rising and going down. Just this ups and downs.
Very volatile.
Yeah.
Right. No, it's good to, and at your age, I would suggest, if you are not able to put aside money or keep money in investing in stocks or crypto or funds, you can at least track these companies, track these stocks. There are a lot of platforms where you can use virtual money to invest. Only if you are very much interested in learning, you can. That is a good platform, where you can put your virtual money in those platforms, and you can track over the year or 2 years how the markets are performing, how your investments are performing. Obviously, that is not the actual platform. That is just for the sake of learning. Yeah, so cryptocurrency is again very, very different from equity. When we talked about equity, we said that equity is more volatile and riskier compared to debt. But in my opinion, cryptocurrency is even more riskier. So one should really have a high risk appetite. One should have the money invested in crypto should not impact your goals. They should not impact your 5 years, 10 years plans in the future. That money should not be a very big chunk of your portfolio, as crypto is a very speculative investment. When we are investing in gold, we have whole in our hands. When we are investing in real estate, we have the house in our hands. When we are investing in equity, we know about the company. But cryptocurrency, we know about the promoters, the business. At the end of the day, there is a business which is backing those. There are some elements which are backing those businesses. But cryptocurrency is not backed by any physical commodity or any metal. So it is a very risky investment, very, very volatile. And it is not even a currency, proper currency, as like there are other currencies which are pegged to US dollar or any other currencies. Cryptocurrency is not pegged to any other currency. And it is not being regulated by governments or banks. It is just deriving its value from a lot of people who are, using that currency. So I would say, like, it's not legal yet, and it is not regulated yet. So it's a very, very risky investment. Then yeah, I would definitely want to talk about the fixed deposits, PPFs, NPS, like very, very low risk, like risk averse people generally go for fixed deposit. If I say, okay, I don't know which fund to invest in, I don't know which stock to invest in, why don't I put my money in the FDs? FD is only for your emergency fund. Don't put a lot of your money in the FDs, because they give you very small return. Currently, they are giving somewhere around 4 to 5%, and inflation is higher than the return which they are giving. So at the end of the day, you end up losing money by investing in fixed deposits. Like the bigger chunk of the investments in the fixed deposits, you should be very, very attentive while making investments over there. PPFs, NPS are still good platforms to invest, because not just return, but they also give you tax benefit. And after a point, that tax benefit also matters because you are going to fall in the 20 or 30% tax bracket. And there are few items in the our income tax return. If you invest 50,000 every year, you get rebate on like that 50,000 investment is tax free. So if you're falling in 30% bracket, you are saving 15,000 of tax straight. So these PPFs and NPS are very good avenues from a tax perspective, and they also help you in the retirement planning.
Ma'am, and one question from the equity tilted question.
Yeah.
Recently, there is an app which gives us the freedom to invest in US stocks. And so is it advisable to invest in US stocks or better to stick with the Indian market?
That depends on your risk capacity and what you are thinking, which company you are planning to invest in. But yeah, this horizon has recently opened, and I personally would do it. Like if like Facebook stock has corrected a lot in last 1 or 2 weeks, so I personally would do it. It is your up to you if you want to invest or not. But if the app is reliable, it is backed by a reliable company, there is no harm in investing via those options. Like, don't be worried about the channel if the channel is a proper company and backed by proper investors. But which stock to pick, if to invest in US stock or not, that is something I'll leave up to you.
Okay, ma'am.
And again, it is not that, I'll tell you, yeah, you should invest in Indian markets. When looking at Nifty, there are a lot of companies which make Nifty 50. So I look at individual company. I would not look at Nifty 50 as a whole. There might be companies which are overvalued. There might be companies which are undervalued. So I'll do my analysis before investing in any company, and I would suggest the same to you.